Well, shares of NerdWallet are rebounding today after the company missed on earnings but saw revenue rise 14% year over year. The personal finance platform also saw a jump in unique monthly users, climbing to 22 million in the second quarter. NerdWallet CEO Tim Chen is joining us now. Tim, it's good to see you. Let's start big picture here, right? Because we are in an interesting moment, if you will, for people's personal finances, right? Economists keep telling us student loans are going to have to be repaid. People's excess savings is being wound down. On the other hand, the economy has held up relatively well. So what are you seeing from your vantage point in terms of what people need right now?
Yeah, thanks so much for having me back. I'm incredibly proud of that team for delivering a strong Q2 when most of the industry were shrinking. We grew 14% year over year. And I think that's really driven by the consumer trust we've been building and the market share we've been taking. To answer your question, it is an interesting paradox, right? We're seeing a bit of weakness in areas like commercial real estate, like you were just mentioning, and banks are actually getting more conservative with some of their lending as consumers are working through their pandemic surplus. There's concerns about the balance sheet in terms of commercial real estate, and there's actually regulatory changes coming. The Basel III endgame, that's going to increase their capital ratios and regulatory requirements. And that's causing them to be a little bit more conservative in terms of lending, even in prime areas like balance transfer credit cards, where they might subsidize 0% interest rates for a year or more when they bring on a new customer.
Well, let me stick with that for a second. Morgan Stanley, which recommends your stock with an equal weight, they did lower the price target to $12 from $13, but they're saying specifically we are now starting to see underwriting standards, which have been tightening materially for subprime and near prime consumers. Well, they're beginning to impact prime consumers. So are we seeing a wholesale tightening of credit conditions here?
I'd characterize it a little bit differently. So I'd say subprime and near prime has been really tightening over the last 3 quarters. We've seen incremental tightening every quarter since probably the middle of 2022. That was really driven by fears that unemployment would reach 5 or 6% exiting 2023. And I think the worst case scenario there has really proven to be a little bit better. So that's actually getting a little better than people thought. What's changed, though, is post SVB, banks have actually gotten more worried about the deposits that they're lending against, right? So as interest rates go up, those deposits haven't been as sticky as banks thought they would be. A lot of people are turning to NerdWallet to find high yield savings accounts as an example, and those deposits are leaving. And so there's a bit of uncertainty around how many rate hikes are left in some loan officers' minds. There's also uncertainty around whether consumers are going to burn through the rest of those deposits in the coming quarters. And that's what's driving some of that conservatism.
You mentioned high yield savings accounts, which, of course, we even hear from institutional investors who come on the show, right? Things like that, money market accounts, et cetera, are still quite popular. And there's the question of when that's going to shift. But I am curious, among your users, where else are you seeing high demand? What do people want to know about right now?
That's really the key area, but you're also seeing a lot of people wanting to figure out what's going on with student loans. There's been the Supreme Court ruling. There's been additional proposals for different income-based repayments program from the Biden administration. And I think that's just driving a lot of confusion. I think all bets are off with some legal challenges out there and going into an election year next year as to what exactly happens there. So we will just focus on continuing to provide guidance as the rules change.
And Tim, when it comes to your growth strategy, are you looking to grow more organically? Are you looking for acquisitions? Where exactly is that fitting in?
Well, we think we have a ton of growth left organically. Our first pillar of growth is land and expand. And that for us, that means more verticals and more geographies. Even within the United States, there's areas like auto loans, seniors, Social Security, Medicare, a lot of sub verticals of small business that we're expanding into from a content and product perspective. Another pillar of our growth is actually vertical integration. And that speaks to areas where humans are involved, brokers, agents, advisors. Can we provide the digital concierge experiences to really help consumers? And then lastly, we're really focused on registering and re-engaging users using data. So we want to nudge you when you should make a smart money move based on what we already know about you. So those are really our pillars of growth.
You were just talking about humans. Let's talk about non-humans. AI is what I'm talking about, because I know you guys have a beta AI chatbot. What does it do? Where is it in its development stage in terms of whether it comes out of beta?
So Nerd AI is trained on NerdWallet's data, and it can do things like summarize an article, or it can figure out the better article to take you to, or it can answer your questions directly based on synthesizing what it's learned from our content. I think that's pretty standard for what AI can do. It's really democratizing this ability to summarize, synthesize, and translate content for users. Now, the important thing is that it's reviewed by experts, because AI can hallucinate. And I think that's really where we're putting our focus. We really want this to work well and be accurate. And that's where the really tough challenge is.
Yeah, definitely. I think that's something that everyone is sort of trying to figure out right now. Tim Chen, good to see you, CEO of NerdWallet.
Thanks so much for having me.